Welcome back. Today we are going to solve a problem which is from tax planning December 2024 attempt question paper DT. Okay. So what's in the question? We have individual tax planning as well as the company tax planning. So one by one we'll solve. Okay, right. On the Indian resident age. Okay. So age is less than 60. Tax regime, as per tax planning, we actually suggest so no issues. So we don't need to calculate the. We don't need to note down anything regarding the provisions and all. Okay. So 52 years, and given the following information: income from the manufacturing business, 10,60,000. Depreciation as per books we have to deduct. Depreciation as per add back we have to deduct the distribution as per income tax, which is 77,000. Includes additional depreciation of 11,000. Additional depreciation allowed only only at normal provisions, not for default regime. Okay, that we have to note down. Right. Then loss from speculation business, that we can set off with the normal business. Not a loss from speculation business. Income from speculation business can be set off against loss from your normal business. So this is not eligible for set off. Public provident fund is given, and medical insurance premium paid for self and spouse. Okay, this is given. This is allowed. This is allowed under 80D up to 25,000. If they are more than 60 years, then the limit will be increased to 50,000. Okay, so 80D. Now we can start framing the answer. Okay, particulars as per normal provisions, default. Okay, now PGBP income. See, income from manufacturing business, which is how much? 10,60,000. 10,60,000. So what's the depreciation as per books? Okay, depreciation as per book already been deducted with the income, so we have to add back. So depreciation as per books, which is 56,000. 56,000 minus depreciation as per income tax, which is 77,000. Which is 77,000 is the total depreciation. They have included the additional depreciation also. We have to segregate 66,000. 66,000. Okay. Additional depreciation as per income tax. Additional depreciation allowed only for normal provisions, which is 11,000, not allowed. Okay, now we can calculate the PGBP income, which is 10,60,000 plus 56,000 minus 66,000 minus 7,000, which is 10,39,000. Okay, 10,60,000 minus 56,000. Sorry, 10,60,000 plus 56,000 plus 66,000, which is 10,50,000. Okay, we cannot deduct any speculation loss, so keep it nil. Now what's the PGBP income? Any other income given? So no other income given. What's the gross total income, which is 10,39,000, 10,50,000. Any chapter deduction, 6A deductions available? Yes. ATC is invested in PPF, so 1,50,000 we can give for or give us deduction under normal provisions. For default tax regime, it's not available. 80D we can give under normal tax provisions alone, not under default tax regime. Right. So what's the total income? 10,39,000 minus 1,50,000 minus 25,000, which is 8 lakh 64,000, 10 lakh 50,000, right? So what's the tax liability? Under normal provisions, just 3,64,000 into 20 percentage, and then 12,500. So total 85,300 is the tax liability without HEC. With the HEC, health and education says 88,712 is the tax liability. Okay, what is for what is for under default tax regime? Okay, under default tax regime, since it is less than 12 lakhs, rebate is given under section 87, so no tax for him. Under normal tax provisions, we have to pay a tax of 88,712. That's it. So which is beneficial? Obviously there is no tax under default tax regime. The client has to be the client Anand has to opt for default tax regime. So the next problem will go. Next problem is from the company perspective. Okay, what they have given: Palam Limited is a domestic company engaged in a manufacturing activity. See, manufacturing activity. Following details to relate financial 24-23-24. So we'll use our financial year 2025, 2026. Okay, as a previous year. So no issues. Financial year Financial Act 2025 applies. Right. Gross revenue from operations, the total sales they have given, manufacturing expenses given, we have to deduct, normal depreciation given, as per income tax only we can deduct, additional depreciation given, we can deduct that also if it is a normal provision. If it is special, if it is a default regime, we can't deduct this. The company is eligible for deduction under section 80IA, which is infrastructure projects the company is working on. Then they can, whatever the regime they follow, they can claim this. Eligible for reduction under section 80 JJAA, which is for increasing the employee base, hiring a new employees from the base. So from the base level of employees, then they can use this, but this is not given. This deduction is not given for special provisions. Okay, special tax regimes. Then turnover of the company never exceeded. Okay, then 30 never exceeded means 25% is the tax rate. Right. You are required to suggest the company as to whether it should opt for the regular provisions or provisions of section 115 BAA in order to minimize the tax liability on the assumption that it has satisfied all the applicable conditions. Okay. What are all the information we have? Normal provision. Okay. 115 BAA. Okay, what's the total PGBP? Gross revenue from operations, which is how much? 80 lakhs. Minus manufacturing expenses. Okay, 30 lakhs. They have excluded the depreciation. We are going to calculate separately, going to deduct separately. Normal depreciation, how much? 7 lakhs. Additional depreciation, how much? 2 lakh. Not allowed. Okay, now any other information? That's it. No. Okay, what's the gross total income of the company, which is 80 lakh minus 30 lakh minus 7 lakh minus 2 lakh, which is 41 lakhs. This would be 39 lakhs. Okay, minus chapter 6A deductions. Okay, what are all the chapter 6A deductions? We have 80 IA, 80 JJAA. How much? 5 lakh, 4 lakh is 4 lakh. Only 5 lakh allowed under special provisions. Okay, how much? 32 lakhs is the total income. 34 lakhs. Okay, tax liability into 25 percentage into 4 percentage plus 4 percentage into 22 percentage plus 4 percentage. What's the tax liability? 32 lakhs. 32 lakhs into 25 percentage into 104 percentage, which is 8 lakh 32,000. Right, 34 lakhs into 22 percentage into 104 percentage, which is 7 lakh 77,920. So we can opt for which section. We missed to include one point for default provisions or no special provisions for companies. We have to add the standard 10% surcharge and 4% HEC. Okay, for any income we have to add 10% surcharge, then 34 lakh into 22 percentage into 110 percentage into 104 percentage, which is okay. One thing I have missed out, I made it wrong. Actually, IA is not also allowed for special provisions like 115 BAA. So we can remove that also. What's the net tax payable here? Sorry, net total income, which is 39 lakhs. Okay, 39 lakhs into 22 percentage into 110 percentage into 4 percentage, which is 9,81,552 is the tax liability. So company can follow normal provisions to attract the less tax liability. That's it. Thank you.